at Emkay Global Financial Services to take us through everything that is happening in the market. What do you make of the current market setup and the triggers that are trickling in from the global market? What makes you believe that perhaps there's some more upside left in the market at this point in time?
Well, I'm not necessarily looking at some upside. Let's try and take a context of what is happening, right? So to me, I think we're done pretty okay in terms of our macro setup, and I'm talking about inflation, interest rates, the current account dynamics till the time the war happened. Subsequently, there was reflexive impact. Your rupee falls, capital outflows happen, and then obviously that feeds into inflation and then into our monetary expectations. I think the biggest problem that we face as a country is that, and this is my personal assessment, that you're on the wrong side of the AI trade. It is such a phenomenal happening, right, in terms of the investments that are happening, in terms of how profound the technology is. And we are just not there in that space, either in the infrastructure side or on the software side or on the LLM side. So, and that's a problem, right? So you may talk about the fact that the market overseas are in a bubble territory, but look at their earning trajectory. It is mind-boggling, right? So whatever earnings growth has happened, the markets have moved in sync with the earnings growth rate. And I don't know when you want to call it a peak over there. I'm not very sure. So we just have to live through this phase.
Since you also spoke about earnings and the fourth quarter earnings season has just ended, any outliers that you noticed because of which you are probably convinced about a particular sector? Any view on the fourth quarter earnings season?
So I think numbers broadly came in better than expectations, right? But again, you should not get too carried away by the fact that autos delivered better numbers. Banks, the numbers were largely ahead of expectations. Surprisingly, even cement sector delivered numbers ahead of expectations. But then you also have to try and put this in the context of the fact that you probably had some, low price inventory and therefore, what you need to figure out is that how the quarter one is going to play out and how quarter two is going to play out. And for that, you obviously need the oil prices to come down. So you should not get too, fixated by what has happened. Anyway, quarter four numbers are backward looking. It is critical that this macro setup ends up in a way that favors India, which means that the oil prices have to go down, rupee has to stabilize. That is when you can take a more convincing call in terms of how the Nifty earnings are going to play out. So far, you are looking at a high single digit for FY27.
Nirav, hi, good afternoon. How do you look at the IT rally of today, 3.3% up in today's trade, while the broader market and the benchmarks are lower? Do you think that it's time that the IT companies have bottomed out and now it's time to look at them fresh?
I have a different view, right? So you cannot figure out on a particular day whether the movement is led by just some statistical noise or there is a change of trend. I do believe that IT is again severely impacted by what is happening in the AI evolution. And coding is the biggest template, right? I mean, the most feasible use of AI seems to be coding, right? So now you can argue that coding is an X percentage of IT services, and obviously, there are a lot of things that they do outside that. But you are running on a treadmill, right? And I think that IT has actually moved from probably growing at about high single digits to somewhere getting into that X growth phase. And the derating is very, very severe. Personally, again, I always follow a rule. If the sector is getting disrupted, I don't look at valuations and try and make a call on how cheap the sector is or how cheap the stock is. To me, every rally in software should be faded into.
What we have seen is also the impact of West Asia crisis on multiple sectors there. How do you look at the second order impact across sectors?
Significant, right? So, so you may want to talk about oil prices and rupee and inflation. I talked about it earlier when we started the show. Please understand that, there's no point of looking at just the direct impact on inflation, right? When you talk about rupee, which has depreciated now by about 7 or 8%, eventually this feeds into inflation. We are talking about petrochemicals, diesel, price, rubber, chemical, textiles, metals, everything. It's just a question of time. And that's the unfortunate part, right? So we are essentially being driven by reflexivity of capital flows, which feeds into my economy. It should be the other way around. My strong economy should try and foster into better inflows on the capital side. The cycle is reversed right now, and we need to change that. And that calls for some big policy changes, in my view.
Is there any sectors which you think that are able to manage this kind of crisis?
Yeah, of course. So I think that if my hypothesis is right, which is to say that AI is sort of leading to a hyper growth rate in earnings for a sector of the part, right? So FIs are chasing growth, and therefore you need to construct a portfolio where you can have at least 20% earnings growth rate, right? I think at least those sectors will be safe. And, you can probably, I'm just talking more at a 30,000 feet level, you've got host of platform companies with established unit economics, you've got these, EMS companies, stuff like that. The threshold for earnings growth has to be 20%. If you are below that, you are likely to invite FI outflows till this AI issue gets resolved. That's on one side of the spectrum. You can also create, a sort of a part of the portfolio which is value driven, where you're seeing an earnings upgrade. I can think of some cheap banks, some commodity plays, and have a barbell sort of a strategy. And in between, then you play your underweight and outweight sectors. To me, a place to hide would be looking at sectors and earnings growth of at least about 20%.
Okay, so that's the sector-specific view, especially on earnings. And let's also talk about the auto sales numbers. And we have seen those numbers trickle in, and some of those companies have reported very strong growth for the month of May. Maruti, for instance, 35% growth on a year-on-year basis. A couple of players from the two-wheeler segment have also reported strong growth. If you've had a chance to look at the numbers, your thoughts on how they have been and what kind of trajectory are you penciling in for the auto sector?
Yeah, good to remind that. So we quite like the space. We like the two-wheeler sector more over there. Within that, we are very, very bullish on electric two-wheelers, right? So that segment is taking off. The unit economics and the cost of the ownership has fallen dramatically. So that's a very, very good place to be there. Obviously, you are seeing some benefits of the GST cut that happened, and then obviously prices have gone up because of the war-related stuff. But discretionary items, low penetrated items are something that we like. So it again falls into some of the spaces where you can look at companies which are going to grow their earnings by about 20%. And we are quite constructive on how the volumes will play out actually.
Okay, so that's the view on the auto sector. But let's also get in Meryl, and she's here to take us through all the stocks that are in focus this afternoon. Meryl?
Yes, coming to you with a list of stocks that have seen buzzing in today's trade. Starting first with Rubicon Research, the company has posted quite a strong set of numbers in their fourth quarter. We've seen rapid volume expansion as well as market share gains in the company's complex generics as well as US specialty portfolios, which has been reflected in the numbers as well. The revenues for the company were up 44% on a year-on-year basis. EBITDA as well surged around 64% on a year-on-year basis. Next up is Thirumalai Chemicals, facing quite some pressure in today's trade. The company reported a weak set of fourth quarter numbers with revenues down 20%. However, profitability was the one that has been shaking the stock's performance so far. They reported a loss this time around of around 28 crores versus last year's 14 crore loss. So the loss here has doubled on a year-on-year basis. Next up is Natco Pharma. The company has reported EBITDA margins at around 17% versus last quarter's 44%. Revenues as well have been down 40% for the company. And brokerage views have also come out with Nirmal Bang Institutional Equity downgrading the company to a sell with a target price at 834 rupees. This implies a downside of around 18% on the stock. So yes, quite a weak set of numbers from Natco Pharma and weak commentary from brokerages coming in as well. Next up is Panacea Biotech. The company's seen weak set of results. Also, revenues were marginally up. Revenues were actually up 26%. However, profit for the company on an overall basis was down almost 50% on a year-on-year basis, and which is why the stock has been taking a beating in today's trade. So yes, these were a few buzzers that we've been watching out for in today's trade.
Nirmal, how do you look at some of the pharma stocks?
So, again, we like, I don't understand that sector very well. That is a very bottom-up sector. We have initiated on companies like Granule. I think we like companies like Biocon. There's a problem with the market leader, which is Sun Pharma. They acquired a company which is good, but that also means that the consolidated levels, the earnings will struggle to compound in more than a single-digit growth rate. And therefore, till the time they digest the acquisition and stuff like that, it's going to take time to play that out. That's a very, very bottom-up story, more than anything else. But yeah, it's not a sector that I understand very well.
Okay, so those are some sector-specific views coming in. But on that note, we need to slip into a very short break. More news and updates will continue on the other side.
Every business is like a piece of land. From the outside, it looks ordinary. The real truth lies beneath. Dig once, you uncover losses. Dig again, unexpected profit shines back. Sometimes it's the heavy chains of debt. Other times the break of fresh cash flow. But deep below, traps wait. And if you keep digging, you strike the jackpot. The real metrics, the real value. This is all about your company, where we dig deeper so you invest smarter.